have Rakesh Arora joining us. He's joining us to talk to us about the fundamentals of the market, what's looking good, and what is something that one needs to avoid. Rakesh, hi, thank you so much for making time and speaking with us. To begin with, let's talk about the space that you track the most, right? That's cement and steel. Let me start with metals and talk to you about that. Do you still think there's a bit of a tactical trade which is lined up, given recently the commentary around China has become a bit more positive? Where do you think we are in the metal cycle?
So, see, metal stocks were reasonably priced and they were trading around long period averages on price to book, etc. And this all this chatter about China stimulus is providing little bit of tailwind to the metal stocks. Secondly, the market itself is a little bit now bordering to expensive side, and there's a rotation happening to value stocks. So metal stocks have also been kind of perfect fit for that kind of rotation. However, I'm not a big believer in China stimulus being able to push demand meaningfully, and because their problem for housing sector runs very deep, and it will require a lot more than just the rate cuts that we are seeing. So I think the rally may not have too much of legs, but yeah, there is support coming in because of sentiment and rotation into value stocks.
Okay, a sentimental uptick is what we are seeing. Let's see how transient or sustainable is this rally, because as you pointed out, a lot more is needed in China to provide that fillip and not just the rate cuts which have happened. Separately, what's your view when it comes to the entire cement space? Because that too has been seeing quite a bit of up move, Rakesh. We have seen some price hikes also happening. But given monsoon is really a lull period, would you use this opportunity to buy into some of the names, or do you expect better levels to come and there's no hurry to buy cement names?
So cement companies would be benefiting from sharp reduction in coal costs, which will flow through in Q1 and Q2 probably. Also, there's expectation that given the way crude is come off globally, diesel prices in India would also start to come off. So that will be an additional tailwind for the cement sector. But I agree with you. There's been a little bit of run up, and stocks needs to consolidate before they can take the next leg up. So probably monsoon is a period of consolidation rather than a big move from here on.
Okay, so that's a take coming in on cement and metals, the two sectors that you track closely. But what are the other things, Rakesh, which is on the anvil? Which are the sectors that's grabbing the most amount of attention? What have you bought recently?
So, see, I think markets had a decent run, and I'm of the view that there's a lot of consolidation which needs to happen before we get, fresh catalysts. So, we would be looking forward to, monsoon. If monsoon is normal, though the risk factors have increased with El Nino, becoming very prominent. But historically, there have been instances where normal monsoon have been there despite El Nino. So I think that is one of the big factors to watch out for. Number two is, Q1 earnings will also set the tone because expectations for earnings growth is very high. Consensus is building in 20% earnings growth for Nifty 50. While economy is doing well and we have tailwinds of inflation coming off, but 20% could be a little bit of a stiff ask in this environment. So Q1 earnings season and monsoon are the two variables that we are watching for. But overall, in terms of sectors, I think banks, while they're underperforming currently, but would be the main driver, when the rally resumes. And autos have been, good performer, but they are still, at a reasonable valuation. And with interest rates probably having peaked out, autos could be the second sector to watch out for. And beyond that, I think IT can also make an comeback if the US economy holds up, much better than what people were earlier thinking. So these are the three, heavyweight sectors which are going to lead the market after a phase of consolidation.
Okay, so that's the word coming in. Banking, of course, is the leadership sector. IT could be a contrarian bet, and watch out for autos because the stocks are reaching a bit of a reasonable valuation. Thank you, Rakesh, for joining us today. Appreciate your time. See you now.